Webull stock managed to bounce back on Friday, gaining 43 cents or 3.88% to close the session at $11.51 per share. That marks the stock's first meaningful move higher in a few weeks after a stretch of persistent selling pressure that had dragged it down toward the $11 mark. So what's really going on with Webull, and is this rebound something that can last? Let's unpack what happened this week, what's been weighing on the stock, and what might lie ahead as we head into a new trading week. The first thing to note is that Friday's move wasn't unique to Webull. The broader market also stabilized after what's been a rough patch dominated by fears of a renewed US-China trade war. The Nasdaq, the S&P 500, and most tech-linked sectors all finished the session modestly higher. Investors stepped back into some of the names that had been hit hardest during the sell-off, and fintechs were near the top of that list. After several sessions of risk-off sentiment, the tone finally shifted. Traders began to re-enter growth stocks that had been heavily sold down in recent weeks. The market action suggests this was a combination of short covering, bargain hunting, and technical buying off key support levels. For Webull, that key level has clearly been around $11 per share. That line has held multiple times now, acting as a psychological floor where buyers step in. The rebound to $11.51 on Friday shows that this support zone is holding firm, at least for now. Technically speaking, this move higher also came after the stock had entered oversold territory on several indicators. The Relative Strength Index, or RSI, dropped into the low 30s earlier this week, often a sign that selling momentum is exhausted and that a bounce may be due. The move up on Friday fits that pattern, a relief rally after an extended downtrend. Now, was this a pure technical rebound, or is there something more behind it? For now, it looks primarily technical. There hasn't been any fresh news from the company this week, no new filings, no earnings updates, and no product announcements. That tells us this rebound is largely market-driven. But that doesn't mean it's insignificant. Sometimes, these technical moves mark the first signs of sentiment shifting back toward neutral, especially when the fundamentals remain strong, as they do for Webull. Let's step back for a moment and recap what's been weighing on the stock in recent weeks. The first and biggest factor has been macro fear. Talk of tariffs and renewed tensions between Washington and Beijing triggered broad selling across sectors tied to technology, growth, or China. Even though Webull is headquartered in New York and operates under US regulations, the company's Chinese roots make it more vulnerable to investor sentiment during these periods of geopolitical stress. It's a case where perception drives price more than fundamentals. The second factor has been valuation compression. After a solid run earlier in the year, fintech valuations have cooled off as investors reassess risk and shift focus toward profitability. Companies like Webull, which are still in expansion mode, tend to get hit harder during those cycles. Third, there's been a lack of immediate catalysts. With no major announcements or earnings on deck, the market has had little reason to reprice the stock higher. In the absence of news, traders focus on macro narratives, and over the past 2 weeks, those narratives have been overwhelmingly negative. And finally, profitability concerns remain a theme across fintech. Webull continues to invest heavily in its global rollout and crypto integration. That's exactly what a growth company should do, but in a risk-off market, investors tend to punish that kind of spending. All of those factors combined to push Webull down toward the $11 range. But what we saw on Friday could mark the point where that selling pressure starts to exhaust itself. Let's talk about what makes Webull's story different from other names in its space, and why the long-term setup still looks appealing. Fundamentally, Webull remains one of the fastest-growing brokerage platforms in the world. It has over 20 million users globally and continues to expand into new markets, including the UK and the Netherlands. That international push is helping diversify its revenue beyond the US market. At the same time, the company has reintroduced crypto trading into its ecosystem, allowing users to trade both equities and digital assets from the same app. That's a big differentiator in a market where most brokerages still silo those products. As the crypto sector continues to mature, that integration could become a significant driver of engagement and transaction volume. In its most recent quarterly update, Webull reported revenue growth of 46% year-over-year and trading revenue growth north of 60%. Those are strong numbers for a company still scaling. The growth story is very much alive, even if the market isn't rewarding it right now. So the question isn't whether Webull is a good company. The question is whether sentiment is about to turn back in its favor. From a technical standpoint, the setup is starting to look more constructive. Friday's close above 1150 marks the first higher close in nearly 2 weeks. Volume ticked up modestly, suggesting some early accumulation. The MACD, which measures momentum, looks like it's beginning to flatten out, hinting that the downtrend could be losing steam. The next test will come at around 12 to 12.50 per share, the area where Webull previously broke down. If the stock can break above that resistance zone, it could open the door for a push back into the $13 range. Support, meanwhile, remains firmly established around $10.80 to $11. As long as that line holds, the short-term technical picture remains stable. So what could drive Webull higher next week? There are a few potential catalysts to keep in mind. First, any sign of de-escalation between the US and China would likely spark a relief rally across the fintech and tech sectors. Trade-related fears have been the single biggest drag on sentiment, so any cooling of that rhetoric would be a major positive. Second, macro data could shift investor expectations on interest rates. If next week's inflation or retail sales numbers come in softer than expected, it could strengthen the case for rate cuts in 2025. Lower rates tend to favor growth and fintech names like Webull. Third, sector rotation is worth watching. After weeks of defensive positioning, investors may begin rotating back into risk-on sectors, particularly tech and financials, if volatility eases. Webull could benefit disproportionately from that rotation because it's been hit harder than peers. Finally, crypto market momentum could play a supporting role. If Bitcoin and Ethereum continue to hold or build on their recent gains, that could drive renewed interest in platforms like Webull that offer integrated crypto trading. Now, it's important to keep expectations realistic. One strong session doesn't confirm a trend reversal. What we're looking for next week is confirmation. Can Webull hold above $11 and build on this move? If it can, that would suggest the start of a new short-term uptrend. If it falls back below 11, the market may need more time to find a floor. Either way, the long-term story remains the same. Webull's fundamentals haven't changed. The company is expanding globally, growing revenues at double-digit rates, and diversifying its business model. The broader sell-off hasn't invalidated the growth case, it's just created a more attractive entry zone for patient investors. Analyst coverage continues to reflect that optimism. Rosenblatt Securities maintains a buy rating with a $19 target price, reflecting confidence in Webull's international strategy and monetization potential. That's still roughly 70% upside from current levels. It's also consistent with the idea that, once sentiment stabilizes, Webull could work its way back toward the $18 to $20 range over the next few quarters. That path isn't linear, it never is with growth names, but the direction of travel remains upward. For now, the message heading into next week is simple. Support held. Buyers showed up. And while the rebound is still fragile, it's the kind of early stability that often precedes stronger recoveries. If the broader market cooperates and macro fears continue to ease, Webull could spend the next several sessions consolidating between 11 and 12.50, setting the stage for a potential breakout later in the month. So, as we wrap up this week, the key levels to watch are support near 11, resistance around 12.50, and volume on any move higher. If we start to see stronger accumulation and a clean break above resistance, that would confirm the start of a recovery trend. It's been a volatile few weeks for Webull, but as we've seen before, volatility often sets the stage for opportunity. The fundamentals remain solid, the growth story is intact, and sentiment may finally be starting to turn the corner. Whether this is just a bounce or the beginning of something bigger, the $11 base is proving to be resilient, and for investors looking toward the long term, that could be a meaningful signal. Thanks for watching, and don't forget to like, comment, and subscribe for more updates on Webull and other growth stocks. Let me know in the comments, do you think this bounce has legs, or is it just a pause before the next move lower? Either way, we'll be watching closely as the new trading week begins.